Well, hi there folks, it's Matt Hayson here looking at everything impacting Sydney's property market this week. Well, we're continuing to see very large volumes of properties going under the hammer across Sydney. Last week it was 1,376. Now, I've been speaking about the overall depth of the buyer pool being lower for many months now, so the increasing spring volume was always going to really be a test and an interesting overview of supply versus demand. Well, purely looking at the auction clearance rate though, it appears buyers are winning the battle, with the final auction clearance rate in Sydney last week sitting at just 43.3%. Now, this is the ongoing downward trend that I can tell you whenever we see this auction clearance rate at such a level that there is downward pressure on certain types of properties. Now, Louis Christopher, the head of SQM Research, has noted that any gains in the first half of the year have now been wiped out. He also went on to say that property prices will be slightly down for the full year in Sydney, and they could decline by up to 5% before the cash rate cuts kick into gear. Now, speaking of cash rate cuts, so much conjecture continues with the latest inflation data hitting a 3.5-year low in September. Now, it's the trim mean inflation though that the RBA prefer to review, and while this is also in decline, it's still sitting at 3.5%, which is above the target band of 2 to 3%. Now, it's expected that rates will remain on hold for the remainder of the year, and CBA being the final major bank to ditch their forecast of a pre-Christmas rate cut. Now, what's creeping into rhetoric though now is that strong employment and inflation remaining high, that the cash rate may not be cut until the second quarter of 2025. That's right, bond market investors have pushed back their timing for the first rate cut until May 20, 2025, while economists are still forecasting the first cash rate cut in February next year. Now, also this week, according to the chief economist at Domain, Nicola Powell, Sydney is on the verge of another housing boom. Now, despite current weaker market conditions in play right now, Dr. Powell is of the view that when the RBA begin cutting rates, consumer confidence will improve, buying activity will improve, and as a result, prices will also pick up again. Love to hear your thoughts on that one. So overall though, conditions are now prime for buyers, with a healthy supply of properties available on the market and a willing number of sellers ready to meet the market and be sold before Christmas. So as we hit November this weekend, it's now just really a solid 6 weeks available now for buyers to be alert, find their value, and get a home before the Christmas break. So that's what's going down in and around the market this week, folks. Thanks so much for watching. Our entire team looks forward to seeing you out and about, and I'll catch you all next week.